Hello everyone, I hope you are doing good. Today in this video I am going to cover your chapter 1 of class 11th accountancy. Yes, chapter 1 Introduction to Accounting. Whenever you start accounting, then the basic introduction comes with this chapter only. So let me begin with what is accounting. Accounting is basically a language of business. Like there are various languages in the world, but when we talk about the language of business, what is business? You see, when you go to a shop, you buy some product, you give your money, that the person is doing a business. So business is everywhere. Just do one thing, look around your room and see any product. You must have purchased that product from a shop. He is doing a business. So the language of business is basically accounting. Now the question is, what is accounting? So accounting is defined as per American Institute of Certified Public Accountants, and we are using the same definition. The definition goes as: accounting is the art of recording, classifying and summarizing in a significant manner and in terms of money, transaction and event which are in part at least of financial character and interpreting the results thereof. This is a hardcore written given definition by IACPA, American Institute of Certified Public Accountants. So we have to memorize it, but what are the meaning of all these terms? What do you mean by recording? What is classifying? What is summarizing? What is interpretation? We are going to discuss all that step by step. So I am giving you one code. Just remember this mnemonic code: IMRCSAC. Repeat after me: IMRCSAC. Here, this IMRCSAC will help you define the whole accounting, the meaning of accounting, as well as its complete process. IMRCSAC. So what is this, sir? I means identification of financial transactions and events. So basically, when we start accounting, our first step is to identify whether the given transaction or an event is of business or not. Let me take an example. Suppose I have a business and I have done some transaction. Let's say I have given salary to my employee, and at the same time I pay my electricity bill for my home. So on one hand I am paying salary to my employee, on other hand I am giving electricity bill of my home. So first step is you have to identify which is the business transaction, and this step is known as identification of financial transaction and event. Here financial word means business transaction. So you must be saying that, sir, the employee's salary which you have paid is a business transaction, and the electricity bill which I have paid is my personal transaction. So the first step of accounting is always identify the transaction of business or event of business. Transaction and event are almost the same thing, but transaction means something happens, that is a transaction, and the result of that transaction is known as event. So this is your step 1, identification of financial transaction and event. Second step, measurement in money terms. Now you have identified that I have paid salary to my employee. This is a business transaction. Now the second step is to measure it in terms of money, because when we record in accounting, everything has to be in money terms. Otherwise, what will I record? So whatever the transaction is identified as business transaction, we have to measure it in money terms. A person sitting in US might be measuring in dollars. We are in India measuring it in rupees, but every transaction must be measured in money terms. This is step 2. Then your step 3 is recording. What is recording? Recording is very simple. When you record a transaction, like I have paid salary of rupee 20,000, let's say. So I will record this transaction in my book, and that book in which I do my recording is known as journal. So you have to remember this name. The book in which we record our transactions is known as journal. So these are your 3 steps. First, identification. Second, measurement in money terms. Third, recording. After that comes classifying. What is classifying? See, there are various transactions which you will be recording in your book. Like see this, in this example, I have written various transactions. In some transaction there is written P. P means purchase. In some transaction there is written S. S means a sale. So there are numerous transactions in my business, P, P, S, S, P, P, S, S. No, now what will I do? I have to classify all my transactions at one place. All my PP will go to one place and all my SSSS will go to one place. This process is known as classifying. So after recording, the another step is classifying, in which we will prepare a book which will be known as ledger. You can see on the top LEDGER. It is known as ledger. Now after classifying, my next step is summarizing. Summarizing, you mean making crisp notes or making a summary. Very simple, summarizing. So in this step, we will summarize the whole balances, all the recordings, all the classifying at one place in a very short and summary statement, which is known as summarizing. And in this step, we prepare a statement that we will be studying later, known as trial balance. So this is your summarizing. So your 5 steps have been completed: identification, measurement, recording, classifying, summarizing. Sorry. After summarizing, the next step is analysis and interpretation. Sorry. Analysis and interpretation means when you summarize everything, then you have to think about it. You have to analyze about it and derive a result out of it. Let's put an example. Suppose you purchased something for 10,000 and you sold the same thing for 12,000. Suppose these 2 things you have recorded. Now you will analyze and you will derive the result out of it that we earned a profit of 2,000. So this is analysis. So let's revise till analysis. So what is the step 1? Identification. You will identify a business transaction. Step 2, then you will measure it in money terms. Step 3, you will record it, and that book is known as journal. After recording, you will classify it, PPP on one hand, SSS on one hand, that is ledger. After classifying, you will make a summary, that is summarizing. After summarizing, what you will do? Analysis and interpretation, that is deriving a result out of it. Now last step is communicating to the users. See, any business who derive a result has to tell its result to all the users. Users, you mean stakeholders, that we will be studying it later. Who are the users? Like owner, management, banks, government, public, consumers. There are various users we will be studying, but every business has to communicate its result to the users. So these are the 7 steps that are basically, you can say, process of accounting or characteristics of accounting. And when you will merge all the keywords, it will become the definition of accounting. See, initially the definition was this. What is accounting? So accounting is the art of recording, classifying, summarizing, that you know the meaning of all these, in a significant manner and in terms of money, that is measurement, transactions and events, that is business transactions, which are in part at least of financial character, means business character, and interpreting the results thereof, that is analysis and interpretation mainly. So this code you have to remember, IMRCSAC, and then you can easily recall the definition of accounting, process of accounting, and this is the whole syllabus or everything that we have to study. Now after that, let me tell you the objectives of accounting. This is a straightforward topic. What are the objectives of accounting? Why do we do accounting? Number one, it helps in maintaining accounting records, because when we do accounting, every transaction of the business is recorded. So obviously my first objective is to maintain proper records. Second, accounting helps me in determining my profit or loss. I am doing my business, I am recording all my transaction, I am doing classification, I am doing summarizing, and after summarizing I am doing analysis. So what I will get my results, I will know my profit or loss of my business. So this is my objective number 2. Third, determining my financial position. What is financial position? Financial position is, let's say, what is your wealth today? How much money do you own today? So in the business, every business wants to know its financial position. Every business wants to know its worth. How much assets, you don't know assets, but we will study it later. How much assets I have today. So all these financial position we can easily identify with the help of accounting. So this is the objective number 3. Fourth, it helps the management, that is, it facilitates the management in decision making. Like management has to take various decisions. Suppose I am a manager in my company and I have 20 lakh rupees and I am planning to invest it in land, I am planning to invest it in real estate. So I have to take decisions, and accounting helps me, it assists me in taking my decisions. So this is also an objective of accounting, that it facilitates management in decision making. Fifth and last, accounting provides information to the user. So one of the objective of accounting is also this, that accounting helps in providing information to the user. Like we have already studied it in the steps, last step, communicating. So accounting objectives are very simple. Let's revise it. Number 1, it helps in maintaining records. We can determine the profit or loss. It helps in determining financial position. It helps the management in decision making, and it provides accounting information to the user. These are the objectives. Now the question may ask, what are the advantages of accounting? So you can use almost the same points, but you can just twist a language here and there. Like, what are the advantages? It helps the management, same point. It helps in determining profit or loss of the business, same point. It helps in determining financial position, same point. Fourth is a bit different. It replaces memory, because now you don't have to remember everything. You can't keep everything here, so you have to record, and accounting helps in that. So it replaces memory. Fifth, very good advantage, accounting is also an evidence in court. Sometimes many businesses use their accounting records as an evidence in court. Sixth, it facilitates loans. For example, you go to a bank and you ask the bank manager, please give me 1 crore loan. What will he say? He will ask, what is the worth of your company? What is the profit of your company? So you have to show your accounting records. So accounting helps in facilitating loans. Seventh, facilitate settlement of taxes. It is a very generic point. When a company earns profit, government take taxes from it, and when you do accounting, you will give proper taxes to the government. So there are various advantages which accounting has. Now similarly, one more question can come. What are the limitations of accounting? Obviously, nothing is perfect. Same goes with accounting. If it has advantages, then it also has its limitations. So limitations are important for exam perspective, and you must know the limitations of accounting. 2-3 limitations are very, very important. Like first one, accounting is not fully exact. Why we are saying it is not fully exact? Listen to me carefully. Exact means 100% true, 100% based on fact. But in accounting, there are various instances where we make estimates, and you know estimates can never be 100% true. So accounting is not 100% exact, because somewhere it is based on assumptions, it is based on estimations. So this is the limitation number 1. Second, it ignores all the qualitative elements. Like suppose there are 2 workers in my factory. and they both got into an ugly fight, and my factory has been shut down for, let's say, 5 days. Is it a loss to my business? You will say, yes, sir. But this whole scenario cannot be converted into money terms. I cannot quantify this whole scenario because it is qualitative in nature. So, second limitation of accounting is that it ignores the qualitative aspects. Similarly, third point, accounting ignores the price level changes. What are price level changes? Let's say you purchased a mobile phone for 20,000 and you record it. I have purchased mobile phone for 20,000. After 2 days, let's say, or after 4 weeks, its market price changes. In the market now the same mobile phone is of 5,000. So you keep on rubbing the old one and keep writing the new price again and again? No. So the accounting always ignores the market prices. Prices keeps on changing every day or every week or every month. So the accounting is ignore market prices. So this is also a limitation of accounting, that it ignores the market changes of prices. Similarly, D point, it is a very big limitation of accounting, that accounting can be misused. There can be biased. We can do window dressing. This term you have to remember, window dressing. Window dressing means you are doing manipulation. You are doing manipulation. When you know the accounting in and out everything, then you can manipulate profits. If you want to show higher profits to take loan from the bank, you can do that. If you want to show lesser profits to save your taxes, you can do that. So accounting, one of the limitation of accounting is window dressing. So you can write 4 points in limitation, very simple points. It is not fully exact, it ignores qualitative elements, it ignores price level changes and window dressing. So these are the limitations of accounting. Okay, let's revise the accounting process. You must be wondering, accounting process? Yes. What is accounting process? That the definition part which we have broken down into that code. What was the code? Kindly comment that code in the comment section. Let me know that you are studying. So the accounting process code was IMRCSAC, and this code is your accounting process only. Again, see the same topic, same thing. I means identification of financial transaction and event. M means measurement in money terms. R means recording. C means classifying. S means summarizing. A means analysis and interpretation, and last C means communicating to user. So this is all for the day. We have to cover the basic definition of accounting, why we do accounting, what is the accounting process, what are the objectives of accounting, what are the advantages of accounting, what are the limitations, and again the same process. If you like the video, if you like the concept, do like the video and just let me know in the comment section if you have any queries, and please share with all your friends. And if you are liking our videos, keep connected with our channel and do subscribe. Thank you so much for listening to me patiently. I'll see you in the next class where I will cover other topics of this chapter. Till then, take care, bye bye, and see you soon.